welcome. Okay, let's just jump right in, because this is a really big deal. For the first time in over 60 years, India is getting a brand new Income Tax Act. So today, we're going to break down exactly what this new 2025 law means for you.
So let me ask you something. Have you ever just felt your head spin trying to figure out the difference between the previous year and the assessment year? If you have, trust me, you are not alone. It's got to be one of the most confusing parts of the old system.
Well, get ready for a huge change. That complex and, let's be honest, sometimes baffling Income Tax Act from 1961 is officially being retired. The whole point of its replacement, the new 2025 Act, is to bring in a simpler, more modern law that's just easier for all of us to understand.
So you might be wondering why the massive shakeup after 60 years? Well, the mission is actually pretty simple. They want to clean up the language, cut down on all the legal disputes, and make paying your taxes much, much easier for everyone involved.
And this is a perfect example of what I'm talking about. Remember all that confusion with previous year and assessment year? Gone. It's being replaced with one simple term, the tax year. So for example, the financial year that runs from April 2026 to March 2027 will just be called tax year 2627. So much more logical, right?
And just to give you a sense of how complex the old system was, the 1961 Act had swelled to over 800 sections. It was this massive, dense document that was incredibly tough for even the pros to get through. Now look at this. The new Act, it's been streamlined down to just over 500 sections. That is a huge reduction. It cuts out so much of the clutter and just makes the whole law a lot more accessible. So how does this all add up to a simpler system? Well, it's not just about cutting down the number of sections. It's also about reorganizing everything so it actually makes logical sense. Okay, now don't panic when you see this table. This is really, really important. While a bunch of the numbers are changing, the actual rules aren't. Your favorite tax-saving tool, Section 80C, is going to be called Section 123, starting April 1st, 2026. Your Form 16, that's now Form 1330. So the key takeaway here is the limits and benefits you're used to are staying the same. You just have to get used to some new labels. And it's not just the section numbers that are getting a fresh coat of paint. Let's talk about the new deadlines that you'll need to start marking on your calendar. Okay, so for all you salaried folks filing ITR 1 and 2, good news, your deadline isn't changing. It's still July 31st. But here's some great news for professionals and the self-employed. You get an extra month. Your deadline is now extended to August 31st. There's also a much clearer system for revised returns. You can file one for free up until December, and if you need more time, you can still file with a fee all the way until March of the next year. All right, let's get to what might just be the most exciting part of this entire overhaul. We're talking about changes that are going to directly impact the take-home pay for millions and millions of salaried employees. This is the good stuff. And honestly, this quote just hits the nail on the head. So many of the tax-free allowances we've been using were based on limits that were set decades ago. They were completely out of touch with today's costs. Well, that is finally changing. I mean, just look at this. The tax-free children's education allowance was stuck at a laughable 100 rupees a month. The new act is boosting this to 3,000 rupees a month per child. That is a staggering 30 times increase. This is going to provide some real, meaningful relief for families. And it's the same incredible story for the hostel allowance. It's jumping from 300 rupees a month all the way up to 9,000 rupees per month. That's another 30x increase. It's a clear acknowledgement of what education and living expenses actually cost today. And the relief just keeps on coming. The tax-free limit on free meals from your employer quadruples from 50 to 200 rupees per meal. The tax-free gift limit triples to 15,000 rupees. And for house rent allowance, that 50% exemption slab that used to only be for the big four metros, it now includes Bangalore, Hyderabad, Ahmedabad, and Pune. That's a big win. Okay, so we've covered salaries. Now let's switch gears and talk about investments. The new act also brings in some very specific updates that traders, investors, and really anyone sending money overseas will need to be aware of. Now, this here is a major win for investors. Before, profits you made from a company buying back its own shares were taxed as a deemed dividend. Basically, that means it was added to your income and taxed at your highest personal rate. Now, it's going to be treated as capital gains, which more often than not carries a much friendlier tax rate. And just a few other key updates for investors to keep on their radar. The tax on trading futures and options, that's called STT, is going up a little bit. But on the flip side, the tax collected when you send money overseas, or TCS, is getting a lot simpler. For education and medical costs, it drops to a flat 2%, and it's the same simple 2% rate for tour packages.
So, there you have it. When you step back and look at the whole picture, from the brand new tax year term to those massive boosts in salary allowances and the key tweaks for investors, the 2025 Act is a fundamental reset. The whole goal, they say, is simplification and clarity. So the big question that's left is, will it actually work? Will it succeed in making tax season a less dreaded time of year for you and for me? I guess only time will tell.